Hey guys, a very warm welcome to you. Welcome back. So this is part 2 of a multi-part series where we are looking at trading with better discipline and emotional control. Like I said before, in part 1, we've kind of covered some of these topics before on this channel. If you're a subscriber, you'll know that. However, we are now going really deep dive into a multi-part series, but still keeping each video kind of bite-sized so you can dip in and out of it, look at it when you want. But we want to ultimately, the end of this kind of mini program is to say, you know what, I've got some ideas, some ways that I can trade with better emotional control, which means that I will break my rules less. Breaking my rules less means that I will make more money. It's that simple pathway, guys. Start from here, work your way through. Okay, so let's look at this slide we've got here now. I've talked about trading plan a lot, and I've actually done a separate mini series where we talk about developing a trading plan and the best ways of doing that. And because I'm a big believer that this is one of the things that keeps you on track, and one of the things that I mentioned in that video, and give it a thumbs up if you kind of like that stuff as well, is the good thing about, or the main thing about a trading plan is that it keeps you disciplined. Because if you know what you're supposed to do, then as soon as you veer off it, you know how to come back. Whereas if you don't have a plan, then you don't know if you're badly disciplined or not, right? So anyway, let's go back and have a look and see what we've got. So you develop a trading plan, and very briefly, if you want to go more into it, go and check out that mini series because that's far more in depth. But on a summary section, don't create a plan that's very hard to stick to. Number one thing I said is keep things simple, guys. You need to, not have it's got to be this and that. It's so rigid that if you break the slightest thing, you break the plan. Keep it simple. Don't overdo it. Simple rules to start off with. You can always add more later on, but it's harder to kind of take stuff off because you can end up taking it off because you've broken it, which doesn't do your kind of confidence any good. Give yourself some flexibility. So don't stifle that trader's feel. Don't make yourself into a robot. Give yourself the ability to make a decision on the fly for something, but just reduce the cognitive load. That's what it's all about. Bringing the boundaries in and still having that trader's ability and feel, but not giving yourself kind of stifling it all completely, because that's often why we break the rules and why we have poor discipline in trading, is because we see the setup, okay, and it's not quite the rigid plan we've got. It must be 2 ticks above here. It must have 10% move from here and here if we're swing trading, and this and that and the other. It doesn't quite do it, but we pull the trigger anyway because we think it's still a good trade. We're breaking the rules, then we break the rules. Maybe we don't stick to the rules for stop loss placement, we don't stick to rules for risk management, whatever it may be, and we end up messing up. In reality, if we gave ourselves a little bit of flexibility and said, you know what, this is the filtering criteria, this is what I want to do with it, then I can take the trade within reason, within the risk parameters that I've got under those kind of boundaries, then you've got yourself a little bit of flexibility. It's not so bad then, as long as you're taking good notes for this as well. All right, guys, so number 3 here, we've got is creating boundaries with some discretion. So stops, position sizing, setups. So what I mean by that is you can either give yourself a very strict boundary and say, well, this is how much my stop's going to be, this is what my position size is going to be, this is my setups, or you can give yourself kind of an option. So you can say, okay, well, my stop can vary between this and this. So you're giving yourself some flexibility, but you're still ultimately predetermining your maximum amount of risk. So you could say, okay, well, I've got, I don't know, let's say a $2 stop on this stock, but my maximum is a $3 stop. So I can go up to $3, but I'm going to move it a little bit closer. So you've got some discretion. It's not fixed, but it means that you're kind of doing something. And also the same with position sizing. Maybe you've got a flexible position sizing. You can go up to maximum of this and minimum of this, and some point in between the two. Again, giving yourself some flexibility. And setups as well. You can maybe give yourself some flexibility. Now, you've got to be careful with this. Don't take it for granted and overdo it and give yourself unlimited kind of, you can trade whatever you want. The point is still bring the boundaries, but give yourself a little bit of flexibility. That might help you with your discipline. And often, as I said here, giving yourself a decision to make at crucial times can snap you out of like a negative emotion. So if you're kind of thinking about, what's the best way of doing this, it's possible, doesn't always the case, but it's possible it can snap you out of that kind of negative mindset that you potentially got that's causing you this kind of worry and concern or whatever, or frustration with the market. So the other thing to think about, guys, is creating an environment conducive to trading productivity. Actually, funnily enough, I've literally uploaded a video on this. If it's not there, it will be up soon. Go and check it out. I've literally done a specific video about this because I feel it's so important. But anyway, just touching on the topic, The environment has got to be conducive to trading productivity. You don't want any outside distractions. You don't want any noise. If you've got other jobs, you make sure they're separate. Same with family. You get yourself a timetable, and the way that I kind of like to structure it is, imagine that you've employed a trader to manage your capital for you. You're paying him 100, 150 grand a year to manage your money. What would you expect him to do? You would expect him to have a timetable, a structure, and to be kind of very clear on what he's providing for you. You wouldn't want him to just be going blasé, which is what we often do as traders. You want to kind of eliminate any of those external influences that could cause you to trade emotionally, because that's the easy win, right? The easy win is to get rid of distractions, make sure you're in a productivity conducive, your environment is conducive to productivity. Make sure you've got a plan. Those are the easy wins, but that can bring in things and make things a lot easier for you. It's harder to have the emotional control in the middle and the heat of the battle, which we'll talk about in a second. But if you do those easy wins first, get your distractions out of the way. You don't want to be kind of bothered about something else that's going to affect you with the markets. You don't want to be in an environment that's very challenging and difficult. You don't have something on your mind. You want to be in a clear, calm perspective and taking actions and thoughts based on what you see, as opposed to having it kind of suppressed by something else. So that's the second part, guys. Stay tuned when we go to part 3 now. We're going to move on and talk a little bit more about trading with better emotional control and more discipline. Take care. Bye-bye.